Hello and welcome to the Bankers Investment Banking Awards 2013. My name's Brian Kaplan, I'm editor of The Banker. I'm here with Philip Alexander, who's the Investment Banking and Capital Markets editor. So Philip, we're at Claridge's in London. It's a black tie dinner. We're expecting lots of guests. But before we talk about the actual awards themselves, let's talk about the investment banking market. And you said in your piece in the latest issue of the magazine that investment banking is back, but not as we know it. What did you mean by that exactly?
Well, certainly on the one hand, 2013 has been a good year for investment banks, or a recovering year in terms of the capital markets activity. We've seen a lot going on in equity capital markets, which have been quiet for several years before that. We're even seeing some big mergers and acquisitions activity, the Verizon deal being
Vodafone,
a great example of that. And although there have been concerns around the US Federal Reserve tapering their quantitative easing program, that hasn't really affected the primary market for debt issuance as well. So it's been very active on that side of things. But what's changed fundamentally since the crisis is the level of regulation in the market, and in particular the regulation over capital and liquidity. And those things have made it much more difficult for banks to run with very large balance sheets. So the sort of flow monster model of banks looking for very large trading volumes to boost their revenues and have a dominant market position, it's not clear if that model's already going to work.
All right, but
anymore.
we're starting to see a lot of banks now emerge who've restructured, who kind of started early and they're now kind of put a new business model into place. I mean, is that something that kind of has shown up in the results that we've seen this year?
Yes, that's right. Definitely some of the banks that moved earlier to reshape their balance sheet and make their use of balance sheet more efficient in their investment banking business have benefited. I think the other aspect has been the realization that a lot of the sort of vanilla cash transaction trading, like cash equities, is very difficult to make money in now. The margins are very tight. So there's been more focus on some of the more structured and what the banks often call solutions. So it's really coming to clients with a bespoke response to a specific problem where the fees are higher and they can do it in a more efficient way on their balance sheet. They make sure that they transfer the risk into the market from that transaction.
Okay, now what about the awards themselves? We've been running the awards at the Banker for quite a long time. I think this is probably our 14th year. We've seen boom times, we've seen bad times. I mean, what sort of response have we got from the market to our awards this year?
I mean, I think one of the key developments has been, it sort of reflects what's going on strategically in the banks. That the days when every bank entered every single category, every bank was trying to be everything to everyone, is kind of behind us. We're certainly seeing, in the same way that we see the headlines about certain banks shutting down particular divisions, you're seeing the same with the way that a lot of the global banks think about the awards. So they're entering certain categories that they are focusing on as a business and where they see their strength. There's only a few that really have a completely universal coverage.
Which has changed since before the crisis.
That's right.
Okay.
Yeah.
All right. So it's a different kind of investment banking market, but some very positive signs there, which we've been reporting on in the Banker magazine. We're looking forward to a great night at the awards here at Claridge's, and we'll be interviewing one or two of our winners later on.
The most innovative investment bank from the Middle East. And the winner of that category is Saudi Fransi Capital.
Hello, I'm with Yasser Al-Rumayyan. He's the Chief Executive of Saudi Fransi Capital, and this bank is our Investment Bank of the Year for the Middle East for the Banker Awards 2013. So yes, many congratulations on the award. And I know you've done a lot of deals, which we looked at very carefully to give you the award, but tell us which one of those deals you're most pleased with, which one gives you the most pride?
Well, thank you very much. Actually, we have done Zain, a rights issue, and it was one of the most innovative, I think, transactions that we've done in the past and the Saudi market. And having said that, also we've done Saudia Catering, and it's the first airlines IPO privatization. So we're really proud of being part of the privatization in Saudi Airlines. So
Okay.
these are, I would say, the best two deals that we've done in the past.
Okay, now you do a mixture of debt deals and equity deals.
Correct.
So give us a little bit of an outlook for the debt markets and the equity markets in Saudi and in the region.
Yeah. Well, the equity market in Saudi Arabia last year was very, very active. This year is not as active, but we've done a lot of deals last year in the equity capital market. And the debt capital market is increasing quite tremendously, starting from I think like 2 or 3 years, and I think it's going to continue. It's not like a one-time thing, and this is basically due to the new Basel III requirements, where banks are commercial banks have more pressure on their balance sheets.
So they need to raise more capital.
Exactly. So the Saudi corporates cannot go for banks all the time, so they need to tap into the new.
So two ways. So the banks need to raise more capital, and the corporates need to raise more
correct.
money that's not bank lending, that's actually in the market. So it
Exactly.
plays to
Exactly.
investment banking, whichever way it turns out.
Yeah.
Okay.
Yeah.
All right, and tell us about the challenges of the region in terms of both regulation and the opportunities that are in the market at the moment.
Challenges that we're facing in the Middle East, I think it's just like any challenges faced by any investment bank around the world. So the main thing is to have good teams over there, because investment banking is all about the people working there. It's not about the balance sheet of the bank only. So as you know, it's about the origination, execution and distribution, and you cannot do that without having a good balance sheet on the origination, a good people to execute and a good people to distribute.
Okay, and what about the upside? I mean, obviously the Middle East is still a fast-growing region. Is that going to create a lot of business opportunities for you?
I think yes. I mean, especially now in Saudi Arabia, with the great spending from the governments and projects, I think we will continue to see more ECM transaction and DCM transactions.
Okay, yeah, so thank you very much, and congratulations again on the award.
Thank you.
So I've been talking to the Chief Executive of Saudi Fransi Capital, the banker's Best Investment Bank in the Middle East 2013.
Next, the most innovative investment bank from Latin America, and the winner is BTG Pactual.
So I'm here with our Latin America winner, BTG Pactual's Hugh Jenkins. So what have been the highlights for BTG Pactual last year?
Well, it was a very important year for us. I'd say firstly, it was our first year as a public company. In fact, one of our larger transactions last year was our own IPO. So we went public in May. We were involved in 2 acquisitions in the region to build out our regional footprint. So we acquired Bolsa y Renta in Colombia, and we acquired Selfin in Chile, so it gave us an Andean footprint. We now have 400 people in Chile, 200 people in Colombia, as well as the 2,500 people that we have worldwide for the company. And transaction-wise, clearly, markets were harder last year than they have been for several years, especially on the equity side. So we were very pleased that we were able to come up with a couple of relatively innovative structures, especially we used in the IPO of Bioserve. We actually had a detachable put warrant structure to allow the deal to be done. Previously, the market had been unable to clear the transaction, so we were very pleased that we came up with a creative solution for our clients, and were able to bring a good company to the market.
And I know that BTG Pactual is really proud of the fact that being a partnership, you guys tend to take the same risk as your clients. So do you think that this will continue to be beneficial, especially in Brazil in the future, going ahead, winning more and more mandates?
I think so. We like to say that we're an investment bank that likes to invest. So we feel that we're really adopting a model which is the original model of the merchant banks here in London, where you provide the right capital for your clients. And if sometimes that means putting your own capital into a permanent structure in order to find the right solution for your client, we're very happy to do that. And I think as we look at the way in which we compete and win market share in Brazil, that's an important component to have. Obviously, we have to have great global distribution to investors. We have to have great analysis and advice to provide, but also having permanent capital to allow us to invest in transactions that we like and support clients that we believe in is a critical competitive tool.
And Brazil in particular has become dominated by Brazilian players, although the international guys are also growing a little bit back their team. So how do you think competition is going to look like next year?
I think it's going to continue to. I'd say Brazil has always been a highly competitive market. You know, in my previous life when I worked for UBS, one of the things I firmly believed was the only way you could compete in Brazil is by having first-class domestic contacts and distribution. It's a very domestic market. It's almost like the United States. It's a much more domestic economy than, for example, China or the UK, where you see a lot of international competition. And so I think to have a very, very strong presence on the ground is critical. And I think that the competition for us will continue to be the domestic banks. Sure, the international banks from time to time make investments in Brazil, but I really think it's hard for them to show the level of capital commitment and investment in people and resources that we're willing to make and our domestic competitors are willing to make. Just for example, we now have 9 offices in Brazil.
So it's a good number, and I'm sure it will continue to grow. But thank you very much for your comments, and congratulations again.
Thank you very much for the award, and thank you for having me.
Next, the most innovative investment bank from Africa. And the winner is the Rand Merchant Bank.
Hello and welcome. I'm here with Daniela Ressel of Rand Merchant Bank's DCM and Loans team in London. RMB has won our award this year for Most Innovative Investment Bank from Africa. Daniela, thanks for joining us. One of RMB's highlights in the last year was obtaining a merchant banking license for Nigeria, one of Africa's fastest growing economies and the second largest in sub-Saharan Africa. What was the reason that RMB decided to enter Nigeria and go for a license, and is it something that's already benefiting the bank?
Look, there's a lot of opportunities in Nigeria, both the international corporates looking for US dollar funding, as well as local corporates looking for growth, startup capital, and local currency funding. I think the two themes we definitely are seeing is both infrastructure and real estate development. There's a lot of activity both in the debt as well as the equity capital markets. I think if we look through our deal spectrum at the moment, we're seeing quite a lot both in the power privatization sector, the agriculture financing, infrastructure, as well as the real estate.
And is expansion into the rest of South Africa into the rest of Africa outside of South Africa one of RMB's priorities?
Absolutely. We have heavily invested in the space. We're selectively building up our in-country presence in various countries and heavily developing our knowledge base in Africa.
South Africa may still be the biggest economy in Africa by quite a long way, but it's growing slowly. Its GDP growth is about 2% at the moment. Is that something that's hurting investment banking businesses, or are there still plenty of opportunities for a bank like RMB in the country?
It's a difficult environment. As you mentioned, slow growth. Banks are very well capitalized and corporates are cash flush. I think what's absolutely key, which I think you mentioned earlier on, is our innovation. And that's really been our driver in this market to our success. I think one of the key differentiators for RMB in a country like South Africa is our multi-product offering that we offer the market.
One of the things that a lot of emerging markets are fretting about at the moment is the looming slowdown of quantitative easing in the US. Is that something that you think will have a big impact on Africa, and do you think it might lead to a slowdown in investment on the continent?
We still think there's a lot of room for foreign corporates who are taking a long-term capital investment view rather than a short-term speculation view that are very influenced by the monetary policy decisions. We see quite a lot of support for South Africa, and I think Fitch actually today mentioned that they don't see any problems for South Africa funding their current account deficit. I think what speaks to this really strongly is our recent National Treasury transaction, which we did in the offshore markets, which was very well oversubscribed.
This was a recent dollar bond that South Africa did?
Yes, correct. 12-year.
Daniela, thank you very much.
Great.
The most innovative independent investment bank. And the winner is Moelis.
Entertainment, show them
Good evening. I'm here with Kasim Kutai, who is co-head of Europe for Mullis & Co., who are winners of this year's Most Innovative Independent Investment Bank Award. Kasim, what have been the key drivers for your business over the last year? What have been the major successes and opportunities?
Well, Philip, it's been a very interesting year for us, and in particular, I'd say what's been particularly striking is the breadth of our activity. I think it almost seems like we've been firing on all cylinders from both a product perspective and a geographic perspective. In terms of advisory products, large cap M&A has been very good to us. We've, as you know, sole advised Omnicom on the merger with Publicis, advised LifeTech on the sale to Thermo Fisher, involved in the Heinz transaction. Looking at, for example, restructuring and recapitalization, the McCarthy and Stone assignment was a very interesting one for us. The restructuring of American Airlines was interesting. On the capital markets advisory side, being involved in the advisory work on the Coty IPO was a very rewarding and interesting mandate. So there's been a real breadth of activity across our different advisory services, whether they be M&A, recap and restructuring, and capital markets advisory. But very interestingly, this year as well, we've seen a lot of geographic breadth to our business. We've seen the significant investment we've made in our globalization effort really bear fruit. And the very recent advisory work we did for Lixil in their acquisition of Groher is perhaps testament to that. But also some interesting restructuring work we've done in the Middle East, not least the restructuring of the convertible sukuk for Dana Gas is something that we're very proud of. So I think the variety of work, as I said, from both an advisory perspective and a geographic perspective is really been a hallmark for this year for us.
Mm. And in terms of the coming year, what are the major opportunities you see in terms of sectors, geographies, and the types of activity you expect to see on the market?
Yeah. Difficult. It's a very good question. Looking at the crystal ball for the next year is quite challenging. I'd expect a few things. I think we will continue to bear the fruits of the significant global investment and international investment we've made. I'd expect to see some good things coming out of India, where we now have a good presence in Mumbai. I think cross-border work is going to be very interesting. I think we're likely to see more M&A from the US into Europe, particularly given where the US equity markets are, in particular the heightened level of general confidence there, notwithstanding some of the more recent issues in Washington. And I would expect to see continued M&A from Japan. And I think Lixil is only one example of what is more to come for a host of reasons. But I think that's going to be very interesting. And again, we have a joint venture in Japan with SMBC Nikko, and I think that is bearing fruit in a very nice way.
And obviously your status as an independent investment bank without the big balance sheet attached, how does that affect the way that clients perceive you and the way that they interact with you and the kind of assignments that they're looking at in terms of the mandates that you win?
Mm-hmm. Yeah, no, obviously that's a very good question, Philip, because it really goes to the heart of a lot of what we do. Not having a balance sheet obviously is critical for our restructuring work. It's a sine qua non, frankly, of our restructuring work. If you're a lender, you're a counterparty, and you're conflicted. So it's not surprising, obviously, that we do well in that arena. And today we're a top 4 player in restructuring. On some days we're a top 3 player, which is obviously quite an achievement in the short period of time since we opened our doors for business. But obviously also on the corporate side, you've got situations where corporates are very, very sensitive to confidentiality, as for example Omnicom was on the Publicis transaction. And there, they want to work with corporate financiers. They do not want the assignment, the work, the M&A mandate to go beyond a very tight group, and obviously once you start involving lending teams, etc., there is an added sensitivity. So I think it's important for corporates from that perspective, but it's also important for a lot of corporates who are increasingly sensitive to having M&A and advisory work really being used as a distribution channel for selling a host of products, whether they be lending or whether they be other types of products. So it is a very important part of our identity as an independent, not to be using balance sheet in that way, because we think it's critical to various elements of our proposition, whether it be confidentiality and whether it be uncompromised advice as we see it.
Well, that's great. Thank you very much for your time, and congratulations on the award.
Thank
and
you very
enjoy
much,
the
Philip.
evening.
Thank you very much for having us.
The most innovative investment bank of the year. And the winner is the Bank of America Merrill Lynch.
Well, this year our big winner of the Investment Banking Awards 2013, our Global Investment Bank of the Year, is Bank of America Merrill Lynch. I'm here with Christian Meissner. He's the head of corporate and investment banking for Bank of America Merrill Lynch. Welcome, Christian, and congratulations on the award. So, first of all, give me a little bit of feedback. I mean, how does it feel to be our top bank winner this year?
Well, of course, it's a great honor, and it's a great pleasure for us, also considering the journey we've been on since our company was formed in 2009.
Okay, and tell us a little bit about that, because obviously you had to bring Bank of America and Merrill Lynch together, quite different banks, different cultures, and I mean, I'm sure it's been painful at times.
Well, I don't think that we would necessarily have picked the 5 years of financial crisis as the time to implement one of the biggest financial services merger. Having said that, there are also opportunities in that, in as much as business models were changing, gave us an opportunity to define a culture that suited the current environment, and it made it a lot more fluid in terms of setting up our firm.
Right, because in some ways it's been a big moment of change for investment banks anyway, hasn't it? So it gave you a chance to kind of reposition the bank.
Exactly. And as always, you have to make the most of the environment. Plus, in our business, things constantly change. So nonetheless, it's been a pretty turbulent time, but I think one where we've been able to accomplish quite a bit.
Okay, now you're two American banks, so we would expect you to do well in America, but the news is you're also doing very well in Europe. So tell us how you've managed that.
Well, firstly, we are certainly two American banks, but Merrill Lynch had a long and illustrious history outside the U.S. as well. Bank of America was more focused on the U.S., but Merrill Lynch isn't a newcomer to the international markets. That's the first point. But at the end, it's your ability to serve clients and the quality of the platform, as well as the quality of the people that you're able to attract to the platform. And I think that's served us well.
Okay, and clearly there's been huge changes in the sort of IT and the technology side of banking, which requires huge investments. So, I mean, tell us a little bit about the kind of moves you've made there.
Well, I'd say more broadly, scale is ever more important, and that's driven in part by regulation and regulatory pressures and the requirements to comply with all the new rules. But it's also driven by what clients want. At the end of the day, what we found is that clients want a banker to serve all their needs, from cash management on the one hand to M&A advice and acquisition finance on the other end of the spectrum, if you will. And the ability to do that requires scale. It requires scale not just in terms of balance sheet, but it also requires scale in terms of your IT platform and your trading systems to be able to compete. So from our perspective, being able to furnish that scale and to be able to invest the amounts that are necessary to keep up are a crucial differentiator.
All right, because I think in an interview with the banker, you described it as a technological arms race. So, I mean, is that indicative of, if you don't keep up, you're really going to get left out?
Yeah, I think so. I think that's the way markets are going, and also regulatory requirements are going. And you can describe it as an arms race, as I did. The point being that the requirements are ever increasing, and there's a shrinking number of firms globally who can keep up.
Okay, thank you very much. I've been talking to Christian Meissner, head of the Corporate Investment Bank for Bank of America Merrill Lynch, the Banker's Bank of the Year for our Investment Banking Awards 2013.